All right. What is going on YouTube? This is Dave's Daily Trades, and we have a special guest for today. We have Marcel joining us, aka BossBlunts, and I'm just going to jump over to his Twitter screen here. Definitely drop a follow because this man has some very interesting information. So, Marcel, I'm just going to push it right over to you to start off, just to give you a little details of like what's going on here, what you found, and what research you put in. So, go ahead and feel free to jump right into it.
Absolutely. Dave, thanks for having me on, man. I really appreciate you. Like I said, you guys that are helping us on YouTube and everybody on Twitter and Reddit that is really giving to the community has come out with incredible due diligence and kind of putting it all together and doing some DD of my own on certain reports. Just hoping to see how everything was looking on AMC and GME turned into some findings that I was not happy with. And so I spent a lot of time passing them off to like people like you and fellow friends and Redditors, and I can't find enough holes in the due diligence for it to make me happy. Let's put it that way. So I don't think it looks great for our economy and the state of our banks and our stock market. And I've got economists and people in finance and in all sorts of industries in real estate that are agreeing with the outlook of the next month and a half are not looking too great. 2 months.
Yeah, no, absolutely. And I
Yeah.
believe we actually connected from Twitter. You started tagging me in some stuff. And this was just so different from everything else I've read on Twitter, on Reddit, on Discord. And you just took a very different approach to see what's going on. But I do have to ask, what motivated you to go through all of this information? Because there's a lot of reports that you mention in this that are just, of course, very lengthy articles. So just curious where you got the motivation.
I started just thinking, what is going to be the difference between this issue with the debt ceiling coming up? Well, the debt ceiling that we're already, has expired.
Mm-hmm.
What is going to be the difference between this time as a looming government shutdown is right over the horizon at the end of September compared to what happened in 2013, 2011, and 2008, and so on? Because there have been debt ceiling crises prior to this. Except the difference here is there's an infrastructure bill that's got a lot of information in it. It's a gigantic bill, and though some of it's been skimmed, there's a lot of regulation about cryptocurrencies, and other things in here that could potentially take away American freedoms, increase our taxes, and just things that we probably would like to look at or know about before we agree to or to see if we're happy about. You know, the way it really turns out is I was just looking for good information on the derivatives,
Mm-hmm.
which are the amount of money that banks owe. But I wasn't expecting to see it was out of line to the point where almost any catalyst, even if it's not the debt ceiling, could send things over the tipping point. Real estate, global warming, China, the Middle East, a lot of things that are happening right now, and they're coming quick.
Yeah, no, absolutely. Absolutely it is. And I mean, just reading through all of this information is just a little bit scary, to be honest. Just because, I mean, some of these numbers that are being thrown around are just absolutely ridiculous. I mean,
And you know
yeah,
what? It is scary, man. That's the thing is I'm not even trying to portray it in a fearful way. I'm just putting the numbers straight from these reports from SIBO, the Congress Budget Office, and OCC, the Office Comptroller, as well as other bureaus that have been released from mid-July through August 5th, and so there's some really conflicting things. And when you compare them to the reports from 2011 that gave estimates for what 2021 would be like, it looks terrible. They estimated that 10-year Treasury bonds would be around 5.4%, and in reality, they're around
yeah,
1.4%. So that's a very small percentage, maybe 15, 20% of what they actually estimated.
yeah,
And
no.
it's not getting better; it's continuing to get worse.
See,
You know,
that's the scariest thing about all of this. It's not
yeah.
something where it spikes, gets really bad. It's something that's progressively getting worse over time. And, that's really, really terrible to see. And I mean, this data, what the people say on CNBC or CNN or all these other places, they're taking the top level data, kind of showing us this. But when you really dig into this, it
So
is crazy.
Absolutely. They're putting so much out there, and pretending like it doesn't matter to the bigger picture, when in reality, that's what we've got to look at. Okay. Because it's not any one issue that's going to cause these things to tumble.
Yeah, no,
It's the
seriously.
conglomeration of everything. For example, the repo reverse repurchase RRP program. It was today $980 billion.
Yeah,
Okay. And that's every single day. Banks are putting money into this RRP program to get a 0.05% interest overnight for these T-bills from the federal government, because they need the liquidity and they need to maintain, to be able to keep it available at all times, because they've got so many over leveraged positions that they don't know what they're going to have to cover next. First of all, I was thinking originally that they weren't putting them in 3-month treasury bills because it was a bad investment of 0.01 to 0.06%
yeah, totally.
interest. Now I'm starting to realize not only is that the case, they put it in a 3 month treasury, they won't be able to liquidate it fast enough if something happens in the next couple of months to be able to use that money towards other assets without having it seized. I'm sorry, towards other liabilities without having that asset seized. Does that make sense?
Yeah, no, absolutely
So
does.
as things are evolving, I'm constantly changing and adding to the due diligence that's been done to try to figure out if there's a solution, or if at least a way to mitigate, aside from the quantitative easing, because inflation and printing money are completely out of control to the point where inflation doubled in the last quarter. From quarter 1 to quarter 2, it went from, I believe, 3.4 to about 6.4%. So it literally increased almost double.
And I mean, not to mention, what was it? 25% of all the money in circulation right now was printed this year. 33.
33%,
Yeah,
one
third.
third, one
That's
third of all the money that exists in the entire world, in the entire history, was printed last year in 2020 by the Federal Reserve. That's a scary thought.
that's insane.
Right?
That is
So
so
what did
much
that tell
printing
you?
right there.
Exactly. What does the price of gas look like? Food, takeout, everything. Used cars have gone up 47%. You know, home sales have significantly slowed. New mortgage applications have been reduced by 27% in the month of July from June. And I guarantee you it's going to be higher from August to July. Why? Because I can see it out in my streets in the for sale signs, that when I bought my house 6 months ago, I had to go in several bidding wars and finally get, when I got this, and lose 3 houses. When I finally got this house, I had to pay asking price.
Yeah,
And I had to buy it on the pre-market through a friend before it was listed on the MLS.
that is insane. I mean, I just had a really good friend purchase her first house. She paid $40,000 over asking. This house did
Wow.
not have running water, did not have heat, did not have
What?
electricity, a complete reno
Man, the
job.
prices.
And it was ridiculous what she paid. I was like, that is crazy. It's just
Yeah.
really crazy out there. And I'm trying to find it right now in this Reddit post where you start talking about, the price for gas, price for food, price for all of this stuff, and how kind of inflation is in the real world in front of our eyes.
Yeah, it's really getting out of control, and the reports from the OCC and SIBO in specific, from the last 10 years to what's actually happening, are way off. And so what that made me think is to go back 10 years further, and those reports are way off also, and 10 years further after that. So it's like consistently we're seeing worse actual growth in our country than what is being estimated by these governmental agencies. So if they're already estimating that we're going to have a rough couple of quarters here in quarter 3 and quarter 4, I think it's from the numbers that are provided, it's looking like it's a lot worse than they're actually telling us, because they're just playing with the words. They're breaking down losses between personal losses and non-essential money. Now, I don't know about you, Dave, but all of my money is essential, right?
Oh, totally. Yeah. I mean, that's what I
Yeah.
think at least.
So they're playing with these words. So they want to make it look like we've lost this much from our personal savings, and this much from our personal income, and this much from our personal, just losses. But the overall fact remains that Americans have lost over half their savings in the last quarter. In 3 months,
Yeah.
all of America has lost half of what it has in savings and investment accounts. Where
And
is it going?
correct me if I'm wrong right here, too. what I was reading from your post is spending was going absolutely through the roof too.
Yeah. And the number one thing that the government was spending the money on that goes towards the gross domestic product, the GDP of the nation, is COVID relief.
Yeah.
The number two thing is Americans buying cars, auto parts, and takeout with COVID relief money. So literally, they're telling us in this report that the top two things that are propping up our money, our economy, are the money from COVID, the PPP slash government assistance for individuals programs, which I'll just use an umbrella term, PPP, to make
Totally.
things easier for
Yeah.
the payroll protection program. So it's not really a good look for America when they're doing these things and telling us that our stock market is strong and our economy is strong and unemployment is falling. Any favors when banks are so over leveraged and upside down to the point when where the SEC, NSCC, DTCC, and FINRA, these regulatory bodies over the stock market and these broker dealers and market makers have to completely rewrite regulations, which they've been doing for the last 8 to 9 months, since before,
Yeah.
during, and since the miniature little baby squeeze, you could even say at best, for GameStop back in January, because that's not even what it was. It was mainly mostly FOMO buying and a little bit of buying back from some hedge funds.
Totally.
There was no covering done at that time.
No,
And
absolutely
it's
not.
funny. It's funny because at the end of the day, AMC and GameStop have nothing to do with it, other than the fact that they're fantastic stocks that Americans love. I love video games and movies. I know a lot of people do too, right, man?
Right there to you, my man. I mean, I've been going
Who
to
doesn't?
GameStop since I was like 7 years old.
Exactly. And even if you don't, you probably remember or enjoy going to movies with friends, for family, your kids, whatever it is you might want to do. Like everybody has these movies and nostalgias and video games that they enjoy, and no one's just about to give it up because of COVID. And that's what these hedge funds and market makers were really betting on.
Yeah.
In the same way that they took out Toys R Us and Radio Shack and countless other companies like that. I bring them up because they're very recent. I think a lot of people remember Toys R Us.
Totally.
I used to love going there as a kid.
Yeah, I'm right there with you, man.
So it kind of really hits home. And the reason we're in this mess is because they over leveraged so far because they didn't think that these companies would survive through COVID. And they have, and they've gotten stronger than ever. And they've increased their balance sheet and paid off debt. And we own the float we own the entire float, which
Yeah.
means that as retail investors, we have the ability to control what the price is. If I say I don't want to sell and everybody else doesn't want to sell either, that price is going to keep going up until it hits the price where somebody does want to sell. That's the only reason why a crazy price, like I don't even think it's crazy anymore. I think that 10,000 for this stock would be realistic. Anything
Yeah.
higher, I don't even know. I don't know
That's the
where the
thing.
max.
We can't even say a price right now because it all
No,
depends on what retail does. If they hold until, I'm just going to throw out a crazy number, 100,000, then that's totally fine. But if people
that's what
start selling
happens.
at 1,000, 2,000, then that's going to be the price. And we literally can tell, like, all right, listen, we want to go to this. As long as everyone holds, we will get there. And that, to me, is
That's
just
the
absolutely
crazy thing.
crazy. Yeah.
Yeah, because you see these things because they're so over leveraged to the tune of 189 trillion dollars. I think that's 189 with 9 zeros at the end.
Yeah.
Okay, it's a lot. That's how over leveraged they are simply in derivatives like mortgage-backed securities, credit swaps, call options that were sold naked, and puts that were sold without any, I'm sorry, shorts that were made without any shares in hand.
Yeah.
And that's why they're having so many failures to deliver. They're consistently rolling these failures to deliver over and over and over again through themselves, each other's banks, through a process, through various processes, including something called netting, where they share assets. Where in reality it's not. They're just pushing money around. They're doing the same thing with FTDs.
Yeah.
Bank of America can roll it to Goldman. Goldman can roll it to the next. Sorry, I shouldn't say the bank. I should say like a hedge fund or a market maker or a broker dealer, maybe not exactly the bank itself. So excuse me, I should not have said those banks' names.
Totally fine. Yeah.
But that being the case, they can roll these hedge funds and market makers. They can roll over these FTDs from shell company to shell company in places like the Caribbean and Brazil. Now, some people thought that something that happened about a week ago, where Bloomberg terminals were showing that the exact number of missing shares in GameStop, I believe, was showed up over in some hedge funds in Brazil. Three
Yes, I
hedge funds.
saw that. Yeah.
Yes, that's a fact. Bloomberg came out and tried to say that it was a glitch. What did Bloomberg cost? Is it 25,000 a year or 50,000 a year? Because I don't remember.
I believe it's upwards of like $50,000, which is
Sound pretty like a pretty bad glitch for a company that charges $50,000 a month for the product, doesn't it?
I know.
I don't think they make that kind of mistake.
No.
And aside from that, what a lot of people don't know is Brazil has more strict regulations with trading than the United States. So in actuality, for that to even happen, it has to be real.
Yeah.
Because Brazil has better oversight over their stock market, and I'm sorry, over their hedge funds than the United States does over the stock market.
Yeah, I mean, I was reading something about China actually banning Citadel Securities and their platform for all of these various things that are going on. And it's crazy that,
Yes.
I mean,
Yes.
I'm born and raised in the United States, so everyone
Cool.
thinks of the United States as the power horse, this big force out here, but look at all these other countries that have so much better regulations over their markets, and the U.S. is in this shithole right now, which is just, you never would think that.
We're in really bad shape, and nobody's talking about it. Fox, MSN, CNBC, none of them are bringing this up, and they never will. They
Yeah.
never will until it gets to the point where they find the person and companies that they can throw under the bus. Okay. There might be a government bailout here, but it's not going to be for Ken Griffin making
No.
$37 million a year off the back of Americans' pensions and 401ks. Okay.
That
They're
is
going to
right.
throw them under the bus and Citadel as well. And other companies are going to take over their positions, their money, their power, other banks, other corporate funds, other real estate companies, and investment firms.
Yeah, no, 100%. So I do want to jump into the what you call part 3 of 4, the debt ceiling dilemma. That was
Yeah.
something that I've personally really never heard about quite in the past. So I was hoping that you could just explain a little bit about what this is and then exactly what you're finding from the CBO articles.
Well, sadly, the debt ceiling is what basically the maximum amount that the U.S. Treasury can pay out, can distribute. And that expired on July 31st of 2021. So currently, in order to pay the bills, the United States cannot print any more of their magical money that they've been printing out the ass for the last year and a half. Okay. So they've got to use the money that they've got available to them and push off bills like pension funds, hospital bills, public schools funding, and all sorts of other things like this for weeks, months, maybe years. Okay. And this happened back in 2011 and 13. And I remember them both. And that's why I did it because, back then, prior to that, and I was in real estate, and I remember how badly 2008 impacted the market and what happened after 2008. I went from, let's just say that after 2008, the only thing I could push was apartments because it's the only thing that people could afford.
Yeah.
They didn't have the credit. They didn't have the money. And they didn't have the employment history because the majority of them had just lost their jobs. So there was a lot of things going on back then in '08. And the government's been kicking the can down. In 2011, we saw the issue. 2013, it reared its ugly head again. And in 2020, and several times since then. Okay. But it hit especially hard back in 2020. And so what COVID did, it probably accelerated the issue, and it's getting out of their control. There's just nothing that they can do by printing more money, although they claim that tapering and quantitative easing are going to help inflation because it's transitory. Doesn't that sound like a lot of
Jesus.
fancy shit to you?
That's all it sounds like to me, honestly. And
It's,
what
it's
I was also reading something online. I'm not totally sure about this because this is a little bit of new terminology for me, but I believe they tried to stop the quantitative easing back in like 2018, 2019, and that's when we started to have that strong pullback in the overall market.
I don't remember the exact details right off the top of my head, but I'm gonna have to look into that. We'll get back into it, but I'm pretty sure I recall something similar to that happening, where they did try to lay off it a little bit and they weren't able to. They kind of had to step on the gas, you know. So there have been some significant changes, and with these things that are going on, it's a much bigger picture than AMC and GME. And I knew that
Yeah.
when I came into these plays and I was introduced to them, you know.
Yeah,
I
no,
knew that
seriously.
it would be, but I had no idea that it would be to the point where some of the biggest banks in America are going to go out of business, completely bankrupt, and it's going to hurt many, many people's pocketbooks and life savings.
It's just some crazy, crazy stuff.
Yeah, really is. And aside from that, you've got an eviction moratorium that's going on, which doesn't really mean anything,
Yeah.
except for the landlords can't get paid. 6% of eviction moratorium money has actually been sent out to the people to receive it to pay their landlords or to go to the landlords.
And you said 6%, just to confirm.
Six.
That
Six.
oh my
Yeah.
god. That is
6%.
ridiculous.
And here's the other thing: that entire 100%, in the tens of billions of dollars. I think it was around 50 to 60 to 90 billion dollars. Only I think it was 90 billion. Excuse me. But only 6% of it's actually been sent. So that means 94% of people minimum have not received the money as a landlord for their employees. I'm sorry, for their tenants living in their places that they're renting from them. Okay. How long do you think you can survive if you've got a couple apartments or an extra house or two that you're renting out? You know,
You
how
you
long?
can't. You can't. I mean, my uncle
Exactly.
personally, he owns about 15 to 20 properties.
Exactly.
That's a
And I
lot of
wouldn't be
money coming
surprised
right
if,
out of his pocket every
and a
single
lot of
month.
people are hurt.
Yeah.
Yeah. I don't know what his situation is or what anybody's is. And there's going to be pockets of insulated growth in places, especially like Florida, because that's basically a different country almost,
Yeah.
you know? But
Seriously.
it, we're seeing it all around the country, particularly in big cities, Chicago, LA, and even other more attractive places like Idaho. Go Google Idaho and see what happened there. What's going on? There's bankruptcies going on left and right, and it's spreading because of the COVID relief payments and people not being able to go back to work or not wanting to go back to work because it doesn't make sense to go make the same amount of money at a job. So
Yeah.
employers have to try to raise wages and pay more, which is creating them to increase their prices. Okay, and they're still struggling to bring people because they're getting paid to sit at home.
Yeah.
Okay,
I was
there's only
reading
so much
something
money that
about
makes you pay
Target.
to get
Oh, go
people to come
ahead.
to work.
Yeah, but
I'm sorry, go ahead,
yeah. So
please.
I was actually reading something about Target. Of course, everyone has a local Target now, where they're actually saying, if you come work at Target, we're going to pay for your entire college education.
Absolutely,
That
a
is
lot of
crazy. I'm
places are
seeing
doing that
signs at
now.
McDonald's for $15 an hour, $17 an hour. Like that is crazy.
I went to my local Burger King the other day,
Yeah.
and it was 6:30 in the evening. Pulled up, and they were closed. And there was a sign on the drive-through that said, "I'm sorry, we're closed due to employment inconveniences in hiring employees." Sorry, I worded that improperly. And
Yeah, you're fine.
they were struggling to hire employees, and so they couldn't even have the second and third shifts that day.
That's crazy. I mean,
Yeah,
I've been going to McDonald's and Burger King since I was a kid. I've never seen a McDonald's or Burger King closed, other than
for
like two
real.
o'clock in the
That's
morning.
a
You know
good
what I
point.
mean?
I was kind of really, really surprised by it. Like, what's going on? That's what's happening, and it's going on all around the country. And at the same time, these reports show specifically that home mortgage home mortgage loans are decreasing,
Oh
but
boy.
commercial commercial real estate loans, okay, are increasing. That means apartment buildings and real estate owned by corporations. Those loans are going up. But so what does that mean? Companies like BlackRock are coming in and scooping up a shitload of houses,
Yeah,
of land. Bill Gates is the biggest land farm owner in America. What does that tell you? You follow the money and use common sense and read the reports because MSNBC's not bringing this up, and Jim Show Kramer's not bringing this up. He's
Jim
telling us
Cramer.
every story when the RRP market's in the $1 trillion a day range. Well, we haven't
Seriously.
seen it in 2008 since the market crash, since the 2 and 3 months preceding it. The inflation rates are almost exactly the same as they were in the 2 and 3 months preceding it, 2008. So we're looking in the exact same fashion. And then we've got the debt ceiling looming. The government's going to shut down by October 1st. Okay?
Yeah.
Congress doesn't come back until the third week of September. And then they've got to talk about this infrastructure bill that's currently getting worked on by the committee. And then they're going to put a little bow on it, make it look real pretty, and tell America, hey, guys, everything's cool. Look, here, we've got the infrastructure bill ready for debate. They're not going to run it past. They're not going to run it through because Republicans are already stating. Just Google it because I'm not going to tell you other than Republicans are physically stating to reporters that they are not agreeing to the things in this infrastructure bill because they don't want to come to an agreement unless they get their way. Now, I don't care if it's the Democrats or the Republicans, but if this doesn't happen, or even if it doesn't come close, if within a day or two of them actually being back, this doesn't happen, we're going to see extreme volatility in the stock market. Because Americans
Absolutely.
get shitless of the government shutdown. That's what happened in 2013.
Yes. Yeah.
And in 2011. We didn't even the government didn't shut down, I think, in 2000. In one of the two it did, but I think in 2011 it did not. And we saw some massive losses to our worldwide savings. And it was mostly all retail investors like you and me and anybody watching this video and our parents,
Yeah.
and our mothers and sisters and brothers, everything. That's what's the worst thing. Yesterday, there was a gigantic gold sell-off.
I was going to bring that up too. I'm glad you segued into that.
Yeah. How could I not bring it up? It's every day. Also, there was a massive crypto sell-off.
Yep.
Why? Because it was Sunday. And on Fridays, hedge funds sell off a lot in order to be able to spend their money in the German markets and on the crypto markets exchanges, selling options, naked calls, whatever the hell you want, rolling over crypto retailers, and then pulling all that money heavily on Sunday.
Yeah.
It's like clock.
Yeah.
And
you tweeted about that today too.
As we've been getting farther along the year.
Yeah, no, totally. And I saw your tweet today too, where it's literally every single Sunday crypto has a sell-off.
Oh.
And this has been going on for a very long time too, and it's not a coincidence.
No, absolutely not. Absolutely not. About a week and a half ago, or last Thursday or so, I started seeing that Amazon had earnings. Maybe it was a week and a half ago. Amazon had earnings, and they were up fantastically in the 25 billion range.
Yeah.
Yet people at 7:30 at night, 7:45 at night, 15 minutes before the market after hours closed, were selling off massive positions to the tune of Amazon losing, almost 8% in a matter of 15 minutes.
Yeah.
Why would that happen if they had such strong quarter-over-quarter earnings to the tune of 27%, $25 billion? The reason being is because what I believe companies like Citadel and other market makers and hedge funds needed more liquidity. I think there's a lot of margin calls going on. All of the top 10 Citadel holdings for that after hours evening were down between 2 and 20%.
Yep.
Amazon was just right in the middle at 8, and that's what caught my eye because of the strong earnings report. And then Facebook was their number 2, and that was down 5%. Pinterest was down 19.5% on a slightly bad earnings report. It wasn't that bad.
Yeah, no, seriously though.
So,
and that all
NVIDIA,
happened.
AMD,
Yeah.
all of these top 10 earnings were down massively, and they all belong to Citadel. Could that be a coincidence? Sure. A lot of things could be a coincidence.
Yeah. No, I'm right there with you.
So this is just going to show how they're increasingly losing their ability to maintain liquidity. They're getting more and more desperate. Today, I posted a screenshot of a massive increase in green volume, and followed by an absolute opposite massive decrease of red volume and sales and sell-offs, which was, in my opinion, the returning of shares and returning of shares or FTDs and the taking out of new short positions. These short ladder attacks are as clear and algorithmic as possible.
Yeah.
If you break down these charts on the 1 minute time frame, you can see these purchases and these sales in absolute perfect increments, ending in almost identical numbers. One will be we'll have consistent volume of around 50,000, and then the next minute we'll see volume of 356,000, and the next minute 546,000, and the next minute 1,000,001, like 1,000,000,000 and one. And then after that it'll go back down, and then they'll come back
Yep.
with a decrease in algorithmic trading with a volume on the following minute of around 564 million and change, which is very, very similar to a lot of the numbers used in calculations and algorithms. So I find that hard to be. It's very easy to kind of point it out and view it when you know what you're looking for, and I find that hard to be a coincidence that that's happening, because I know we're not going off and deciding to buy tons of shares in the 15 minutes, and then the moment after that we go and decide to all sell off a bunch of shares. That doesn't make any sense.
No, absolutely.
Let's move on. Like, we could talk about examples all day.
Yeah. Oh, yeah. No, seriously, we really could. So one thing I want to ask you, obviously AMC for the past, I would say almost week and a half, 2 weeks, we've literally been flat. Very little movement in between 32, or actually we hit a low of 28, but call it $30 to like $35. So I know
that's the little channel we're trading in right now.
Yeah. Okay, so I was going to ask you, in your opinion, do you think that is any coincidence of, hedge funds, market makers, all of the above having excessive liquidity problems, and of course a lot through the reverse repo purchases of nearly 1 trillion?
It definitely has to do with it, because if they don't get out of this position by scaring retail out, because that's the only thing that they have left over us, if they don't get out of this position, they're all going to lose their jobs. They're going to have all their assets that are here in the United States sold off. And I say that specifically because I know for a fact that Ken Griffin and company have a shitload of assets overseas. So I hate to say it, but he might he probably won't go to prison, but if he does, he's not going to be living out of a cardboard box when he comes out.
No.
He's either going to flee the country or end up overseas when he gets out of prison, if he does, in his estate.
Oh, yeah. So he's got some stuff tucked away.
And it's not just like one guy. It's many, many hedge funds.
Yeah.
Okay. And they have very strong and powerful backers. For example, Citadel Securities is one of the biggest market makers and hedge funds in the world. They make the market and they buy and sell to the market as well. Okay. That being beside the fact, how many people or how many companies do you think provide Citadel Securities with money for their hedge fund?
I couldn't even answer that question, honestly.
You want to know how many?
Yeah, let's hear it. Bring it on.
17.
Jesus Christ.
17 people / companies provide Citadel with more than half of all money that is being traded in that market.
That's just ridiculous. What?
There's some crazy things happening here. They've got more than half the market share.
Yeah.
And in multiple aspects. So, but aside from them, there's so many other hedge funds that are going to go broke that when they do, it's going to cause the banks that lent them money, like JP Morgan, Goldman Sachs, Bank of America, and Citigroup, to go bankrupt.
Yeah, that's the thing.
And when they do, that's going to impact a lot of people. Okay.
Yeah, I feel like so many people are very much fixated on Citadel, and it's just because of a lot of the Ken Griffin memes that are floating around the internet. But there are so many other banks, hedge funds that are all tied in together to this. And it's not one hedge fund is going to fall. It's many institutions are going to fall because of this.
And that's where the problem's coming in.
Exactly.
The SEC is taking the reins because they know what's going to happen. It's an inevitability because the derivatives are so out of control. The total derivatives numbers are increasing daily. The assets are decreasing daily. And the majority of these assets, a lot of these assets, I should say, not the majority, are not actually assets. They're cooking the books by
Yep,
saying
exactly.
that the short positions, which are actually liabilities, are assets, such as an investment in a stock for gain and profit if it goes up. That's a long position.
Yeah.
So they're literally cooking their fucking books in, and they're still showing massive, massive losses because of the rehypothecation, the synthetic shares, the abusing, the selling of shares 10 times over, 20 times over, or more for stocks and shares that they don't have in hand. They're selling you a car with no title, and then they're never giving you the car. They're just taking your money and they're never dropping the car off.
Yep.
You
That's exactly what they're doing. It
know?
is crazy. And it's just, I did go to school for finance, learning a lot about like the behind the scenes
Yeah,
stuff. I never
awesome.
imagined that this would happen in the U.S. markets. Like that just blows my mind right there. What
I've
is
known about
allowed?
it since 2008, so it's not really like super surprising to me.
Yeah,
But the way that they've continued to let it happen after they said they implemented these regulations is beyond ridiculous. It's a joke. It's laughable. It's
yeah,
laughable. Payment for order flow was invented by Bernie Madoff, the crook, in 1996 as a fantastic way of making money.
yeah.
So what are you going to, what are you going to do other than continue to try to do the only thing you can do, and that's fucking hold.
Yeah.
That's the only thing we can do. So I'm going to buy and I'm going to hold, and I know a lot of people are going to too. And eventually, we're going to come to a point where these hedge funds can't take it, and so sadly, it's going to make banks go out of business,
It is.
and it's going to hit the DTCC and the NSCC $76 trillion insurance policy. Okay, and then maybe some others as well. But we're all going to get paid at the end of the day.
Oh,
That's what matters.
absolutely. And
The
to your
fucked up
point
thing
of
is,
buying and holding, it's
yeah,
working. It's absolutely
it's
working.
working. They're so desperate. They're
Yeah.
so desperate. The reason we're in this position now is because the only thing they can do is double, triple, and quadruple down by taking out more shorts and getting people to paper hand
Yep.
and sell out their positions because they think they're scared of the 29 or the 28s or the 17s. Honestly, I could care if it went down to $5 tomorrow. I know I'm holding. I
Right
know
there.
I'm holding.
Yeah. No, right there with you.
That's it.
And
That's
I
it.
mean, these hedge funds have billions of dollars. They've put and
Yep.
created these algorithms that think that when the price falls by X amount, you're going to have people start to sell. But
That's
it
what they
is
thought.
crazy what this community has done because we have literally rewritten the way retail trades. Well,
Exactly.
we see
You're
the
right.
stock going down 20%. You know what? We're jumping in, we're buying more.
Buy more. And you can't say that about other things. For example, about a week and a half ago, the Dow dropped by 800 points.
Yeah.
It was, and what happened? It got eaten up immediately by massive corporate funding.
Yep.
Why is that happening? I don't know, but I believe that there's a quid pro quo going on between the banks and the Federal Reserve to prop up the stock market when these kinds of issues happen, and they will try to delay the inevitable for as long as possible so they can get out of as many short positions and try to keep as much as they can.
Yeah. And I mean,
I have a feeling one of these banks might come out on top. I don't mean to cut you off.
yeah, no, totally fine.
I have a feeling one of these banks might come out on top, one of the big five.
Yeah,
I think it might be Bank of America, but I don't know.
I mean, I would hope so because I personally have all my money tied up with Bank of America and Merrill Edge.
They're
So,
going to hurt. They're
oh,
going to hurt.
I mean, that's the
Well,
thing. All these banks and institutions are going to be hurting.
yeah.
But one, I do believe what you said that one of these banks is going to come up on top. But
And I could be wrong. And I don't think that, I personally, I don't think that they're going to be the top bank after this,
no,
but I think they're going to be one of the few of the tops to survive. But there's going to be a huge change of power, both financially and economically, over the country and the people and the government, whether anybody wants to admit it or not, because the powers at play here are bigger than you and me or any
way
of us
bigger.
or all of us combined. I'm nothing. I'm a number to them. I'm just an ape,
Yep.
you know. So whatever's going to happen is going to happen, and I'm not here to scare anybody. I just want to show people what's in this reports, and it's that imports have slowed and exports have slowed, and our savings has been cut in half in one quarter, and inflation has doubled in the last quarter. And I don't know where the third quarter is going to be,
Yeah.
but they're estimating it's going to be worse. Okay, they were thinking that the GDP was going to grow by a very small percentage if the pandemic eased, but it's not because more people are getting sick with Delta variants and all sorts of Greeks, and we're pretty soon we're going to run out of Greeks for all these damn variants.
Oh, I know. Seriously, we have
You
Delta
know?
coming out now, and
So
then I heard rumors about what is it, Delta Plus, something
Lambda,
like that.
I don't know what the heck's
Yeah,
going
yeah,
on.
I'm losing track of all this shit.
But the point is that we've got to get it under control. But before that happens, things are going to get a lot worse.
Yeah,
And the GDP was supposed to increase slightly if the pandemic eased, and it's not. Also, per their words, as inflation eased and as unemployment grew. Now, we had a kind of a strong jobs report, but the
yeah,
jobs report doesn't mean anything
that's the thing.
because new jobs were created doesn't mean they were filled. I'm looking for employees and drivers right now.
Can't
But
find them.
that doesn't mean that I can find them
Yep.
because a lot of guys don't have a truck ready to go. I don't have 100 trucks ready, just waiting to hire a bunch of
No.
guys. I'm a small business owner. I'm looking for owner operators and things like that. And a lot of businesses are in the same position. So what's happening, even though the jobs report makes it look fancy, we had 800,000 jobs made this month, it doesn't mean a goddamn thing because unemployment in California and other states like that, in 9 states, is almost 8% as of July 30th. Okay?
That
These
is
numbers are
wild.
astronomical. Two or three, let's say almost 3 out of every 20 people in California or other states like that are unemployed. Will not because they don't have a choice.
Yeah.
Okay, and this is the people that can report it. Some independent contractors will qualify for government aid, but the majority won't. The reason being because it's very difficult to show 1099 year over year losses, especially if last year, for example, you weren't a 1099. So now you won't qualify. Okay, there's a lot of factors at play here. The eviction moratorium. Okay. These people haven't gotten paid. These
Yeah.
tenants are going to be in the homes squatting, and it looks nice for now. Pretty soon, that landlord is going to lose that home. And when the lien
That's
gets taken over by BlackRock, the government's going to kick you the fuck out.
exactly.
You're
Exactly.
on the street with shit credit. Who are you going to rent from? BlackRock. And they're
Yep.
going to charge you an arm and a leg because you have shit credit and nobody else will give you an apartment.
Yep. Exactly.
That's it. You know?
Man,
So
this.
at the end of the day, this is a lot bigger than AMC and GME. This actually has nothing to do with them.
Yeah, you're
They just
totally
happen
right
to
on
be
this.
part of it, you
Yeah,
know?
and what I've heard is just it's crazy because I when I first got into AMC, I would never imagine sitting here having this conversation with you. I
I know
never
this is
thought about
insane.
any of this stuff. And the
This is
more,
insane,
yeah,
dude. How could this be that we got into this position where these banks are 190 trillion dollars in debt amongst the four of them?
yeah,
Oh, I'm sorry, it's 90% of that much. So take off a couple trillion.
yeah, yeah,
Come on,
points
what? Are you
there.
kidding me? And
Yeah,
that doesn't include the synthetics, the FTDs, the naked shorts, and the rehypothecation that's happened 10 times over,
yeah,
and the shares overseas. These guys are fucking bankrupting our country.
yeah. That's exactly what they're doing. And I just hope that there's some people that are actually held liable for all this stuff, man. It has to. I mean, to
Yeah.
the point that we're at right now, with all of this stuff that you just mentioned before, someone's got to go down for this because this is just not right at all. So let me ask you this. I know you've been talking a lot about the DTCC and other regulatory bodies. Do you think all of these new rules and regulations that they're putting in place are actually going to do anything?
Did they have to?
Yeah,
They have to because it doesn't. If they don't, it'll collapse the American economy, and they're
exactly.
not going to let that happen. It's going to hurt us a fuckload.
Totally.
Okay, the last time that we got close, even close to the government shutdown, the world global equities lost $2.5 trillion in a day. The SPY lost 6.7%.
Yep.
The S&P lost over 5.5%. Like these are serious, true facts. Just go Google them. And I don't even think the government shut down in that instance,
No.
August 9th, 2013, and in August of 2011 as well, and September. These are crazy, crazy things that are happening. When the last time when Obama and legislators were talking about it, it took them about a week and a half, and we still saw these massive, massive losses in our markets. The majority of them weren't from people. And here's the thing: is that wasn't all the money that banks had in there because that 2008 they already had, and they already had a lot of money in RRP. So that
Yeah.
means they've already maintained that on side liquid and available. That was like the rest of the money that they had in the markets to pull out. So the majority of what was left was retail.
Yeah.
And we're the ones that took the hit when the markets collapsed from their sell-off. And the only thing that we can do here for this next time is be aware of what's happening, use our ears and read into these reports. Don't just take them for face value that this is what they're saying on the news. Read the damn things, even if they're boring, or listen to somebody talk about them so that you can understand what the hell they're saying.
Yeah. See, that's key right there. Because
Yes.
as we know, there's more than meets the eye with a lot of this stuff. And we cannot rely on CNBC and all these other places to give us this information. We have to read it and understand it for ourselves.
Sure, sure. And I know it's hard. It's not fun, but there's reasons for it that are better than seeing what's going to happen on the stock market. I was seeing what might happen with my, friends and families, 401ks,
Yep.
my own stock market investments, but also the business outlook of the futures of my investments and the way that I want to run my business and expand. Like I have to look into the outlook for the next 1 to 10 years. Minimum.
Absolutely.
So that's why I constantly read these reports. And there's never been anything worthy of talking about of this note because we've never seen something like this before. None of us alive.
No.
We're at a point where we're seeing the catalysts and the debt and the crises at our hands that are combining 2008, 11, and 13 and the Great Depression all together.
Yeah, no, seriously. And the crazy thing now, too, is the power of the internet. Like, there are people on LinkedIn now, Reddit, Discord, Twitter, like every single social media platform is literally blowing up about all this stuff.
Yeah, brother. That's absolutely true.
It's crazy.
And it has to. It has to. Because where else are we going to get our information?
Exactly.
And you make a good point. How could it be that 14 subreddits out of probably the 24 that I posted it to took down all my posts in regard to the economy and these publications and these reports that are directly from the Federal Reserve and SIBO and OCC, the Department of Labor, and the Bureau of Economic Development.
Dude.
Like all of these are federal government reports. I'm not spreading misinformation. I'm just sharing information that's true. For example, ones that got me?
What?
Even if you could say maybe it's a tiny bit conspiratorial just because I'm throwing out ideas, the subreddit conspiracy banned me. Okay. The subreddit poverty finance banned me. Economics, economy, world markets, stock markets, and stocks all permanently banned me. And I've got proof. I've posted them all on my Twitter as well as other things. Okay.
That is crazy. And you know why? I hate to say this too. I really think.
You know why?
Yeah.
You know why?
It's because people don't want to listen to this. They don't want to know the truth because it is scary.
Partly, I think you're right, and I think another right. There's some people that are that I've been told that are higher up admins directly for Reddit and these kinds of forums, which are moderating the communities and taking off topics that they need to be that they don't agree with.
You know what?
I don't know about you, man, but I know I could easily call up and find out who works at Reddit and offer them a couple bucks if I'm Citadel and make them take some stuff down. I'm sure somebody would do it.
Oh, absolutely. That's a very solid point. I didn't even think about.
I mean, we could probably do it right now. I could probably make 3 phone calls and we have somebody on the phone.
Seriously. And especially a little bit of money. Money talks.
Money talks, especially with companies like Citadel. They can offer somebody triple their yearly salary for one moment's work.
Yeah. I mean, look at all. I mean, a lot of people on Reddit were posting screenshots of people offering them money to post certain bearish articles on GME, on AMC, and it's like, are you serious? That's what this is getting to?
That people all around the world are just coming up with these, are getting banned and offered money to post things.
Yeah.
What a coincidence.
Seriously, man.
And we're the dumb money.
That's what blows my mind.
Yeah, we're the dumb money. They're the ones that are going to bankrupt our country.
Yeah.
But we're the dumb money because we like videos and games.
I mean, I laugh every time I hear us being. I mean, Matt Kohrs going on CNBC saying we're dumb money, and it just blows my mind. And especially when I remember back in January, we're at $5, $10 around that area. People are like, you're going nowhere. You're lucky if this goes to a penny.
Yeah.
We hit $72, my man. Like that was unbelievable. Just to be able to be like, you know what? Like we are not dumb money. We know this stuff. We know exactly what you guys are doing. And we have, I think it was 4 million apes that are constantly researching. Yeah, more. I think it possibly even 5 million. Researching all of this stuff who are not financial advisors, who are not.
Well, you know what? Some of them are.
So,
I'm
some
talking
of them are, yeah.
economists and people that work at hedge funds and market makers all around the world are in on this
Oh
because they
yeah,
see the play and they get it
yeah.
and they understand. They agree with the information about the economy.
Yeah,
I'm not saying that we're saying everything perfectly. I'm just
totally.
saying we're trying to present the facts and see what people make of it for themselves.
Yeah, I mean, I think we were talking about when we were texting about Peter Han, like that guy on LinkedIn who's coming out and
That's right.
posting a lot of information.
I spoke to him. I sent him my due diligence.
Yeah,
We spoke a little bit, and I won't tell you exactly what he told me, but he said that it's entirely possible.
yeah,
In a way, I'm not going to share anything of other than what he told me, but he did say it's entirely possible.
yeah. No, totally. And I was right there with you. I was messaging him on LinkedIn, and some of the stuff we were talking about. I
He's just
mean,
one of many. He's one of many.
yeah, that's the
And for
thing.
those who don't know, I believe he's the head manager of an investment firm in Calgary, Alberta,
Yeah,
Canada. And there's other people that I talked to. One of the head economists for a local company. He also reviewed the due diligence, and other people in logistics and finance and banking have agreed with what we're talking about and say that we're as close to on point as they've seen. And I'm not. I don't even want to be right at this point.
I know.
I want to be completely wrong.
That's the
I'd like
craziest
to
thing about all
disagree,
this
but
shit.
not at the cost of our damn economy
Yeah,
and our futures, and Americans losing their savings and pensions and 401ks,
I know.
and federal employees not getting paid on time, and doctors and hospitals and public schools. This is a goddamn shame.
I know. And
How
I
can
look
we
at
get
my
mad?
parents right now who are literally, they're about to retire in the next 5 to 8 years. They're
Yeah,
relying on their 401k to get by in life. Like
exactly.
that's a crazy thought. And that's where it like really starts to get personal, where like we're literally gambling around with our parents' 401k's money, or at least my parents' 401k. And many people out
I
there as
get it.
well.
I get it. Not financial advice. I
Totally.
advised my mother to liquidate hers last week,
Yeah.
and she did. Because of what we're talking about. Because these are all truths
Yeah.
to these reports that are given to us directly from these guys. All we got to do is read them and
Yeah.
open our eyes and do
The,
our own due diligence.
the data's right there in front of us. It's just a matter of
Yeah,
reading it and putting words on paper and making sense of
yeah.
it.
And like I said, I hope we're wrong and the economy is strong and everything. Regardless of that fact, at the end of the day, these banks are still going to squeeze, and the majority of them, of these top five, are going to go out of business.
Yeah.
And when they do, it's going to really injure our stock market.
Yeah.
That's it. There's no way around it.
I mean, what we
And
saw in March is going to be nothing. March of 2020.
oh yeah, no, that was nothing.
That
That was
was. I mean, I think
not
that was
compared
like
to us.
a 30% decline, but I mean, this
That
stuff
was a
that you.
steep correction. It was a steep correction. Like a lot
Yeah.
of people that I know saw a huge drop in their investments, a huge, like a third. This is going to make that look like nothing.
Whew,
You're
seriously.
going to wish that's what the outcome was after this if you're not careful.
Yeah. And the
Not,
thing.
this is not financial advice, and we are not financial advisors.
Yes, absolutely.
This is rough. So, yeah, man. Any other questions or anything you want to talk
Yeah.
about?
Yeah.
Because
I mean,
I don't
honestly,
want to just be so doom and gloom. I just want to tell people I love the stock. That's it.
we love
Not the whole.
AMC and GME, my man. That's what it's
Yeah.
about. I mean, honestly, you have gone through much more than I even imagined to be covering today. I really appreciate
Thanks,
your
brother.
time. And
It's
especially,
worth talking about.
yeah, and especially being 24 years old, I don't know it all at all. And
And
it's
that's
just
the thing.
amazing to connect with people like you, people who I've been talking to overseas, just gaining information and helping my own knowledge and education
And I
about the
remember,
financial market. Okay.
I agree with you, brother, because I'm 35, you're 24.
Yeah.
In '08, I remember hitting that. Like I was a young adult, I remember that hitting me and my family and everyone that I know. And I understand that people that are a little bit younger than us, than I, maybe, or maybe around your age or
Yeah.
even a little younger yourself, they don't really remember or know how much their family struggled just to get by through that shit.
I know.
And some people do, but not many.
Yeah.
And that's why we need to be aware of what did happen, because when most people are like, "Oh, I didn't know that this was the case with the debt ceiling." Yeah, it's always the case with the debt ceiling. Every single time it comes up as an issue,
Yeah.
and people say they always pass it. They always pass it. We've had government shutdowns before, and anything's possible with these guys.
Yeah.
So you shouldn't put anything past them.
That is the one thing we need to take away from this conversation here.
The main thing
Yeah.
is because in order to get that limit raised, all 50 Democrats have to unanimously agree to it, because Republicans have already said that they're not going to do it.
Yep.
Okay? All 50. I've never seen, or very, very rarely seen, all 50 of any party agree on anything.
Yeah.
So that's the worry. That's the worry, because they're butting heads directly over the infrastructure bill and everything in it. There's things in here that are going to take a lot of our freedoms away, man. It's going to be nasty. And crypto regulation.
Oh yeah,
So,
I was just going to bring that up.
Be careful with it, though. I don't know what else is going to happen. You know.
Yeah.
And you know what? We're gonna need other videos in the future, because there are other things that we didn't even touch on. Like,
I know.
You know, we don't even have to get into the catalysts. You can use your own imagination, because I'm not trying to be a doom and gloom person. Think for yourself.
No, for real.
You know?
Well, hey.
So, thanks.
Yeah, I really appreciate you coming on and taking the time to meet with me. And then, of course, all of our various conversations. Thanks for tagging me in posts and just bringing stuff to my information.
Absolutely. That's the point. You know, it's just to see whoever's willing to listen, wants to take it with a grain of salt and see if it helps them. Great. If not, well, I'm sorry we wasted your time.
Yeah,
you know,
totally.
That's it.
But there's millions of other people reading that information and, you know, helping out people that you don't even know, which is crazy.
Yeah, it's pretty cool. So thank you too, man, for everything that you do again for this community. Man. You've been fantastic. Keep it up, brother.
I appreciate that, man.
Every day.
Thank you very much. All right, Absolutely. So I'm just gonna end the stream right now, cut through the rest, but we can continue chatting if there's anything else.